Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of WTI oil on February 18th. We are on the daily time frame. As you can see, after an upward move this week, oil prices closed yesterday with a bearish engulfing candle. At the beginning of the week, with the possibility of rising tensions, the price of WTI increased. However, yesterday, after the conclusion of the second round of negotiations between Iran and the United States, oil prices retreated. Following the fluctuations we witnessed yesterday, the daily FVG oil price filled the price range of $63.91 and ultimately reacted to it. By examining the 4-hour time frame, we can see that after its upward movement, the oil price has now entered a range and is fluctuating within a consolidating zone. We saw that yesterday, before the negotiation meeting, oil prices rose following statements from Iranian officials, but as you can see, it reacted to the 4-hour fair value gap. And subsequently, after the negotiations ended, the oil price also declined. This price drop continued down to the 4-hour order block and the range of $61.79. After the negotiation meeting, Iranian officials announced that in recent talks with the United States in Geneva, they had reached an understanding on a framework of general principles to advance a possible nuclear agreement. This progress, if it continues, could reduce the risk of military conflict in the Middle East and pave the way for the lifting of some of Tehran's economic sanctions. However, it is also important to note that this diplomatic progress occurred simultaneously with increased military activity in the Persian Gulf. And because the risk of military conflict has not been completely eliminated, we are still seeing price fluctuations in oil. We are currently looking at the WTI oil chart on the 1-hour time frame. Currently, the related news lacks sufficient clarity and certainty, and that is why the price of oil will fluctuate within a specific range. And within this range where the price is fluctuating, you can be a seller at the highs and a buyer at the lows. Up to this point, we can clearly see that in this time frame, the price entered the 1-hour unicorn zone, and after each of the two entries into this area, we encountered selling pressure. Next, when it comes to the factors influencing price, we will have the liquidity zones. As the nearest sell-side liquidity, the 1-hour FVG is located at the price of $61.7. A 1-hour BPR liquidity has formed in the range of $63.25, and the deeper buy-side liquidity is above the previous high. In the recent price movement, we observed that the liquidity below the previous low, under the $62 range, was collected. And after this liquidity was absorbed and a reaction to the 1-hour FVG occurred, the price began to move upward. Now, moving forward, we are more inclined to look for a bearish setup, and the reason for this is the announcement by officials from the two negotiating countries regarding a reduction in existing tensions. We can consider that as the price rises and reacts to the 1-hour FVG located in the $62.84 range, it can collect the FVG's liquidity and then move towards lower levels. Wishing you success and profitable trades.